Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today. And if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now, that being said, in today's episode, I'm talking about Bitcoin price, Elon Musk, ChainX, Chainlink, our usual 404 Logic Not Found segment, and more. So make sure you stick around till the end of the episode to catch all of the updates. Now, as always, we're going to kick it off with questions from you, the awesome folks who support Crypto Over Coffee. And if you want one of your questions answered on the episode, leave them in the comments section down below. Tweet me at Hashoshi4 or leave them in the Hashoshi Discord, which will be linked in the description on your platform of choice. Please do subscribe to the channel, hit the bell notification button, or follow the podcast on your platform of choice so you can get a heads up whenever I post new episodes of Crypto Over Coffee. So let's go ahead and dive into the questions. Now, the first question of the day is from Charles Ginzel on Twitter. Does the dropping BTC dominance portend the end of the bull market, as it seems historically correlated? Is there something fundamentally different this time around? So essentially, what this is asking is, right now with Bitcoin dominance or BTC dominance sort of falling to relatively record lows, people are wondering, does this mean the end of the bull run? Because it has in the past indicated that way, particularly in 2017, well, 2018 as well. And in my opinion, I think that right now we cannot go by that metric in terms of when the bull run is over. Why is that? It's because, first of all, there are way more projects right now than there were even in 2017 and 2018 during the ICO craze. The second thing is that a lot of these projects that were just fledglings back then now have delivered on mainnet ecosystems. They have, a rich world of DeFi or NFTs, etc. They actually have value. So it's, yes, real world utility, like you said here, Charles, but it's also this sort of larger amount of capital that there is available out there because more money has come into crypto. We're well over what we thought we would get to in terms of overall market capitalization. Bitcoin has been tracking towards 1 trillion in total market capitalization. Like, there's all sorts of stuff going on now that we didn't have in the past. And I don't know necessarily that Ethereum is going to be the new torchbearer indicator of the continuance or the end of the bull market, if you will. But I think that what has happened is that a lot of the money that's gone into Ethereum has also started to spread into some other altcoins as well, other layer 1 networks. And you have interoperability projects like Polkadot and Cosmos, etc., that are really, really gathering some steam and pulling money in. So I really just think this is more of the diversification than it is one project or one indicator being better or worse than it used to be. But I really don't think that Bitcoin dominance dropping like this is an indication of the end of the bull market. In fact, I actually think this is positive because it shows that there is actually more value in the broader ecosystem outside of just Bitcoin. So thank you so much for your question. All right, we got another question, and this one I think is from Twitter or from Telegram. I can't really remember. My apologies, didn't grab the name. But anyways, so this question is really about whether or not Ethereum and Ethereum 2.0, whether or not it's going to make MATIC and other layer 2 networks maybe less important, right? So the idea is that if you're someone who holds MATIC or Polygon and you hold something like, Engine, right, with their JumpNet NFT layer 2, people are wondering now, when Ethereum 2.0 comes out, are these projects going to be completely useless? Are they going to not be necessary, obviously, because Ethereum is going to scale well and hopefully fees are going to be lower by then? Do we need layer 2s? Here is my general answer. I think that Polygon, formerly MATIC, JumpNet, these projects that are now becoming more specialized, right? They're not just general layer 2 solutions where you can publish transactions on them, you can transact amongst one another, you can mint NFTs and, just do all sorts of things and then port them back to mainnet. They're becoming more standalone networks, right, with their own security guarantees. Or they're becoming very specialized. They're going to be an NFT layer 2 solution. They're going to be a DeFi layer 2 solution. I think that means that in the future, when Ethereum 2.0 comes out, there is still going to be an incentive for people to use these layer 2s because it will still be cheaper than to transact on the main Ethereum network, in my opinion. It will also be a place for really specialized use cases to facilitate transactions that might need to be even faster, that might need to be even cheaper, that might need to be more tightly integrated with another external system. I think there will still be use cases for these, off mainnet sort of transactional layers. And I also think that there will be value in terms of these layer 2s being bridges to other ecosystems as well. So, Polygon is really trying to push the envelope there as well, to bring in sort of the Polkadot angle to get these networks working together more, and I can get behind that, of course. So long story short, I really do think that MATIC, Polygon, other layer 2 networks still have a future beyond Ethereum 2.0. And, of course, not all will survive, but that goes for basically every project in crypto. Not all projects are going to survive. So thanks so much for your question. Third question of the day is from Alan M. Barry Jr. I've noticed gas fees have been better lately. Well, unfortunately, today they're not as good. With no progress on 1559 or any fix, where do you think the lower fees came from? Quite frankly, the lower fees in the last couple weeks has been because we've had these large scale pullbacks in price. I think people are maybe they were a little nervous about it, and we're not using the Ethereum network as much. There was also a huge sort of surge in the holding of altcoins, right? People were buying and then holding at the low prices. Whereas during, price run-ups and, really just in general, when things are normal, people are continuously using the Ethereum network. I also think that there was sort of a lull in the NFT craze during this last couple of weeks, because I've noticed even sentiment online, on Twitter, on Reddit, etc., there was just less frenzy on the Ethereum world in terms of NFTs, and I think that probably contributed to the lower gas fees as well. But the Berlin hard fork probably did make a little bit of a difference as well, with some of the the contents there, but also just the sentiment that comes out of that. In July, though, we're going to see the effects of 1559. I think most of the benefits are going to come in the deflationary concept behind Ether. I think Ether's price is going to continue to go up as it has been. And subsequently, I think we're also going to see that fee bidding and the pricing of transactions might be helped a little bit, but I don't know that it's going to really fix the problem, because 1559 is structured in a way that, might still, at peak capacity, that is, still have a problem with fee bidding. So we shall see what happens, but hopefully that answers your question. Thank you very much. So with that, folks, let's go ahead and dive into the news section. And of course, just a friendly reminder, please be aware of scammers in the comments that are posing as me. I do not have a WhatsApp. I will not ask you to contact me. And if that comment that you see does not have the name highlighted like you see here, it is not me, and you can go ahead and report them. So please do be safe out there. And by the way, I'm revamping the weekly giveaway to be even better. So folks who join every week to get the Kobo, it's coming back, but I'm going to have to pause the giveaways until June, but they will be back soon, and it will be better than before. Now, in Crypto Over Coffee tradition, let's start with some Bitcoin news and BTC price analysis, which this week is going to be a more positive exercise than last week, thankfully. Coffee break. Coffee this week is from Red Rooster, wearing the hat. So Bitcoin rose from the depths of sideways trading in the low mid to 50K range, and then went back up to the brink of 60K this week, where it's been hanging at 59,000 for a fair bit of the week. Now, this period of consolidation has seen monster numbers on exchanges in terms of purchases and outflow of Bitcoin from exchanges to private wallets, which we can only assume is to hardware wallets. Now, if you remember months ago when I reported on this similar trend, we went from 40,000 to 60,000 in Bitcoin price after a period of fairly negative sentiment. In other positive news, the centralization of Bitcoin mining has been increasingly evaporating, with April 2020 being the first month that I can remember where China has represented less than half of the total hash rate on the network. This means that North American mining is responsible for this shift, and with more and more hash power coming from the Western Hemisphere and North America, of course, most of which with lower cost energy in storage or renewable energy, makes mining operations profitable in places where the economics of mining has not worked before. So this is good news, right? This is very good news that mining is being more decentralized. And finally, the Bitcoin network is well over 50% positive signaling from miners on the adoption of the Taproot upgrade, which I've talked about several times in the past. I guess, almost 2 years actually, I've been talking about this. The Taproot upgrade in and of itself brings more efficient and smaller sized Schnorr signatures to the Bitcoin network, which should help nominally with transaction sizes in blocks. These signatures are also homogeneous in construction, meaning that privacy is better protected across the variety of different signing schemes that you might use, from multi-sig to single signer to time-locked wallets, etc. So overall, Taproot is a no-brainer upgrade to Bitcoin, and to me, its adoption will further drive Bitcoin towards this bullish direction that everyone wants to go in. And I think that this summer is going to be a mixed bag of price movement, but we are going to get a new all-time high by fall, in my opinion. But what do you think? I'll leave it up to you. Now, ladies and gentlemen, it is time for 404 Logic Not Found earlier in the episode today. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video or this podcast get some attention from the algorithm robots, please do hit that like and get subscribed or hit follow, because it tells the robots that you enjoy the content and others might also enjoy it. So thank you so much for that in advance. Now, I've seen a market uptick in the rhetoric about Bitcoin and crypto at large, really, and really how it's horrible, it's evil, it's only for criminals, it's a terrible investment. I mean, you have the billionaires, right? You have a billionaire like Charlie Munger on a live video saying he thinks Bitcoin is disgusting and not in the best interest of humanity. Heck, you even have a survey released online that said people who invest in crypto had reported that it negatively impacted their relationships. I mean, it's getting crazy now, right? These criticisms, these are the things that seem to get amplified on the major media outlets. And while I accept that there are criticisms, valid criticisms to be laying towards Bitcoin and crypto, the positives far outweigh the negatives. It's purely illogical and wrong to only hear one side of the story. So in today's 404 Logic Not Found segment, I want to let my friend Mauricio Di Bartolomeo, Chief Strategy Officer at Ledn, share his own firsthand stories about how Bitcoin is changing people's lives for the better. Ledn, of course, is the sponsor of Crypto Over Coffee, and it's a big reason why I'm honored to work with them. It's this mission, right? It's making Bitcoin-backed loans accessible to people all around the world to help them in a positive way. So have a listen to what Mauricio shares here. It's so critically important and really impactful to me. So here he is.
I'm originally born and raised in Venezuela. And that's how I got into Bitcoin in the first place. It all happened so fast. And I guess to give people context, like the Chavez dies in 2013, and that coincides with just an absurd drop in oil prices. And so it was the perfect storm for Venezuela. As this was happening, my brother, my youngest brother, who was emphatically Venezuelan and really wanted to stay, he did not want to leave. He was reluctant to leave. He was reluctant to start a business anywhere else. And I think it was summer 2015 or something like that. Yeah. He was only Venezuelan with a smile. And so I asked him what he was doing. And he said, I'm mining Bitcoin. And like, I've been doing really, really great. And so when I started seeing how him and his friends were basically using Bitcoin, they were earning hard asset. They were, for the first time ever, seeing an asset appreciate in dollar terms. And perhaps this is like a common thought for many people, but there are countries that print money to infinity and make it illegal for their citizens to exit the currency. For example, in Venezuela, inflation was at, I believe it was 8 million% on an annualized basis. And the government made it illegal for the citizenship or for citizens to buy dollars, euros, anything that could hold its value was illegal. Get out. You can't get out. And so you're getting this literally melting paycheck every day, and you can't buy dollars. And so what people start doing after this is they start buying non-perishables because things hold their value. Like things are getting reticketed at the grocery store, like on a daily basis. Right. And so you can essentially buy tuna better than having cash and then trade your tuna a week later for toilet paper. And so that's what creates this quasi barter economy. So when people start doing this, things start running off the shelves, and prices of food continue to tick up in the black market. right? What does the government do? They make it illegal to hoard tuna. So so supermarkets can only sell you 1 can of tuna. They'll have like a whistleblower network so that people can like rat on people that have too much tuna. And so it becomes this witch hunt to value preservation. And so in the middle of this, and this is hilarious because, not hilarious, but I think there's a stark difference between how people in investor markets and people in emerging markets get into Bitcoin. People in investor markets, they understand monetary policy, monetary theory, they read books, and they're like, oh, this looks like a great decision. In Latin America, in hyperinflation environment, it's not like that at all. It's, you have to get rid of these bolívares. The only thing around is this Bitcoin thing. I've never used it. I don't know how to hold it, but it's better than losing my money. So I'm going to put it in here. And then they bought it. And then they start seeing something appreciate in dollar terms, which I know sounds trivial. But in those markets, people have no access to North American real estate, no access to North American equities. So something that appreciated in dollar terms is something that had never been seen before. And it was incredible for them. Their wealth was actually improving, not only holding its value, but going higher. Anybody with a graphics card in a country like Venezuela can actually earn an income that surpasses minimum wage. I don't know that a lot of people I don't think people glimpse that the minimum wage in Venezuela is $2.4 per month. When you think about sending money cross-border, the person that checks off this box is some entity that is associated deeply with the government. They fix the exchange rate. For the longest time, Venezuela had fixed the exchange rate at way lower than it really was, to basically hyper inflate all of its domestic development numbers. For example, if I'm the government and I tell you that the Bolivar is worth, the 2 Bolivars are worth $1, and that's the fixed exchange fee. And I have a 3,000 Bolivar minimum wage, that's $1,500 a month. But if the person that gets paid those 3,000 Bolivars can actually only get $20 with them in the black market, the actual market, that's what your salary is. The tricky thing with that is that because they control everything, if somebody of your family had gone to the US and wanted to help you by sending you $100, your relative would not get the real exchange rate. The government would force them to take the 2 Bolívares per dollar rate. And so sending and receiving money in and out of Venezuela in dollars is not an option. You can only send and receive value in and out of Venezuela fairly through digital assets. And that Venezuela is not the only country in that boat. And of course, it's incredibly exciting to hear about PayPal and all these other glorious companies offering even more tools to already wealthy investors. But it's what you don't see that should be grabbing headlines. It's Miguel being able to save enough to buy a ticket out of Venezuela. It's Juan being able to sell his car that he used to drive for a taxi, which, by the way, is a huge liability in Venezuela because if a tire pops, nobody can get you $250. They trade that taxi for a miner, and that miner creates passive income and releases his creativity to do a gig online. And that is just net positive to society in general.
Now, it really speaks for itself. Bitcoin is making a positive impact for real people that are facing situations that many of us are lucky enough to have never experienced. And this cannot be ignored. The ethos of Bitcoin is resoundingly positive, and anyone focusing solely on the negative must be met with a 404, logic not found. And if you want to hear the rest of the interview with Mauricio and all those great stories inside of it, stay tuned as it's coming soon. Now, actually this morning, before filming, a few folks on Twitter reminded me of many comments and questions about the ChainX project that serves as sort of a Bitcoin layer 2 solution in the Polkadot ecosystem. And I thought that it would be good for me to do some quick research this morning and share my thoughts with you on it if I liked what I saw. Fun fact, I did like what I saw. By the way, this is proof that I listen to you guys when you ask me to look into things. But anyway, I decided to put ChainX into this episode so fast because I do think it's something that warrants deeper research. At its core, though, ChainX is one of, if not the oldest, Polkadot project, and it will certainly be in the mix for the parachain slots. It is built on the core substrate framework that powers Polkadot parachains, and quite frankly is a fantastic invention. ChainX was founded on the idea that Bitcoin and its sound economics should not be limited to the single canonical Bitcoin network chain, and that the market cap of Bitcoin and holders of that asset should be able to bridge that value to DeFi, stablecoins, and decentralized applications across the broader blockchain ecosystem. Of course, based on that description, you can see where Polkadot comes in, because it will enable ChainX to truly become the asset gateway that it was intended to be, bridging Bitcoin and other assets together across the ecosystem. Now, I've said for years that the future is multi-chain, multi-protocol, and that adoption will come when the friction between different blockchains is gone. And projects like ChainX are seeking to help that mission. There is no reason why Bitcoin's immense value should be locked out of DeFi and other use cases in the blockchain world. For networks like Ethereum and Polkadot, imagine the response to a secure and provable capital inflow from Bitcoin to DeFi. The results, in my opinion, would be pretty powerful. Now, the native PCX token sits at the core of the project and its operations, and it has a supply of 21 million, naturally the same as Bitcoin, and it also has halving events, the first of which will happen in June of 2021, so it's coming up here. Now, I, of course, cannot peel all the layers, the deep layers of this project in Crypto Over Coffee, as it would take way too long to do it, but this is a good jumpstart for folks who want to get ChainX on the mind and on the radar and dive deeper. So if you want to dive deeper, definitely do so before the halving event in June, because I think it's going to be a wild ride. Well, next up, folks, is today's game of Fact or FUD, where I take a piece of no good, very bad news and tell you whether it is fact or simply fear, uncertainty, and doubt. And this is actually kind of a package deal, Fact or FUD, because there are multiple instances of the same news floating around, which is essentially notable figures pushing the narrative that crypto is risky, you could lose everything, people should be careful investing in it. For example, and this is the example I'm going to use today, everyone's beloved Dogecoin hype man and meme lord Elon Musk changed his tune about Doge and crypto recently by making it clear to people on social media that they should use caution when investing. Of course, this causes unrest and fear amongst investors because they listen to everything Elon says, which I don't recommend, by the way. That goes for everyone, not just Elon Musk. The truth is, though, this is responsible of him to say. He's not saying don't invest in crypto. He's saying be careful. Let's be real. If he loses millions, it'll hurt. It's not going to feel good, but he's going to be fine, right? If other people, most people, lose their life savings FOMOing into Dogecoin, they won't be fine, right? So I get it. It feels like criticism. It feels like a negative for crypto, but it's not. This is good stuff, right? This is much needed clarity and cold truths that people need to hear. You have to know the risks about crypto, or you can get burned, right? We've seen it happen before. Folks that watch this channel, for example, know that, and you're ahead of the curve because of that. Sadly, though, others are not yet aware of this, not yet aware that you need to have a plan, a strategy, that you can lose everything. And I don't want to see the same stories from 2018 repeat. So all in all, this news is fact, not FUD, but it's not negative at all. It's healthy, strategic value. Now, in other news, I had a really interesting session reading articles about a hackathon solution actually that uses Chainlink and its off-chain adapter functionality to integrate a two-factor authentication API with a smart contract on the blockchain. I mean, first of all, what a great idea. You can have smart contract inputs for two-factor authentication and verify it on chain. That opens up tons of use cases like securing high-value transactions with 2FA or requiring a second factor to use the approve functionality in a token contract so that you can allow tokens to be used or spent by another entity with two-factor. The possibilities here are endless. However, what you're probably wondering is what the heck this adapter feature is in the first place, so let me explain. In the world of software, adapters are often referred to as purpose-built programs or applications that are used to facilitate communication and interaction between systems. They're usually small. In practice, adapters might help connect two disparate applications by translating data from one format to another as they communicate, making sure that the data is in the right format for each side. Now, in the context of Chainlink, adapters are the same type of application components, and they allow off-chain Chainlink node operators to connect to other systems or one other system and get a response back to share on-chain in a format that a smart contract understands. In this case, the other system would be a two-factor authentication API, or application programming interface. An API, though, for those who might not know, is basically an interface through which developers can interact with an application to supply inputs and get an output from a particular set of functionality. In this case, it's going to be you supplying a user ID and a secret hash, and then the API will give you back true or false as to whether or not the code is valid for that user's two-factor authentication code. This adapter functionality, of course, can be used to connect Chainlink node operators to a variety of other applications and services to provide provable results to smart contracts on the blockchain. So this is super powerful stuff, and it's one of the reasons why Chainlink is valued like it is. So I will leave a link for more details on this 2FA system if you want to dive deeper down below. For Elrond eGLD holders, this week was an exciting week as well because it marked the first time where users can view their allocation of MEX tokens, the native governance token for the upcoming Maiar Exchange, which is essentially a DeFi platform on Elrond. The network has been going through snapshots that evaluate one's eGLD balance in storage, staking, etc. to determine how many MEX tokens one will receive to use in the Maiar Exchange ecosystem. And this means that if you hold eGLD in the Maiar app wallet, for example, you will have some MEX balance to claim. And what I love about this whole way that they're doing this is that they're encouraging good practices in the way that the distribution of MEX is taking place. For example, if you hold eGLD on an exchange, you're not going to get the MEX for it. If you're participating in the network with staking, you will get a multiplier on the eGLD and MEX subsequently that you earn from that eGLD. This is genius, right? Because it gets people engaging in the network. It gets people to move their eGLD into self-custody. It's encouraging good practices. So to check your MEX balance, head over to maiar.exchange on your web browser, enter your address to check your balance. And in tandem with the developer grants and funding program on Maiar Launchpad and the universal Maiar login, which lets users leverage their Elrond credentials for login from the app, Elrond is making the world of cryptocurrency a much easier place for users to get max value from, and I really love the way that the project is unfolding. Now, it's been a while since I reported on something like this, but it's actually very notable in this case, and I think it hits on a point that I think everyone should understand, right? Just recently, it was announced that the CFO of Bridgewater Associates, John Dalby, will be departing his post to take on the same CFO role at the Bitcoin-focused company NYDIG, which stands for New York Digital Investment Group. Now, you might have heard of Bridgewater Associates because of its famous founder, Ray Dalio, who has been in the news for his commentary on crypto, Bitcoin, stocks, etc. in the past, if I remember correctly. However, why this is notable is because yet another big name from traditional finance, a big organization in traditional finance, is having a leader leave to enter into the world of Bitcoin and crypto, which just shows that the resistance in traditional finance towards this technology and paradigm is weakening. And these are increasing numbers of Wall Street type folks headed towards the light, which I know he's exposing my bias, right? But hey, the crypto show here is crypto over coffee, right? So it makes sense. John Dalby will be a welcome addition to the NYDIG team, or NYDIG, I'm not sure how to pronounce it, and hopefully will lead the company, at this promising company that is, to a very successful future. And to be honest with you, I think watching this shift for many people in traditional finance over to the world of crypto is something that people underestimate, right? It shows that people with the most deeply held convictions, sort of counter to Bitcoin, are starting to see that there is value there. And I think that that shows the precipitating effect of the macroeconomic environment we live in and the value that people see in crypto, because it isn't going away. It's maturing, it's getting better, it's becoming more accessible. This is fantastic stuff. So that's going to do it for Crypto Over Coffee today, folks. If you do have some time to stick around, please do check out the interview that I did with my friend Anthony, who is the CEO or founder of Vinovest, a fantastic place where you can invest your hard-earned dollars into fine wines without any of the hassle and headaches of storing it and worrying about finding it. They take care of everything for you, so you can really hold a liquid asset. pun intended. I've been doing a lot of diversifying into other assets as well lately. So if you have time, please check that out. I'll link it up on the screen. But thank you so much for all the time you spend watching this and every other episode of Crypto Over Coffee. Hope you and your family have a restful weekend and week ahead. And until next time, cheers.